welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital assets space. I'm Emily Parker, filling in all this week for Christine Lee. And joining me is my co-host, Chief Content Officer Michael Casey, filling in today for Lawrence. Good morning, Michael.
Good morning, Emily.
Let's first take a look at Bitcoin. So the CoinDesk Bitcoin price XBX index is currently trading at a little over $47,000. That's down a little under 2% in the past 24 hours. And the CoinDesk Ether Price Index ETX is currently trading at a little over $3,100. That's down a little under 2% over the past 24 hours. And finally, the CoinDesk DeFi Index, DFX, is trading at around $638. That's down a little over 2% over the past 24 hours. So, Michael, we have a little bit of a pullback in Bitcoin today after the excitement of Bitcoin crossing $50,000 for the first time in 3 months. What do you see going on in the markets?
I mean, look, it feels like it's just a pullback. It seemed like there was a lot of momentum on the upside beforehand, but I'm reminded of those days when I was at Dow Jones and the Dow got through 10,000. That shows how old I am. I go back to that moment, and we made caps that said Dow 10,000, and then it promptly fell down below it, and they had to push out the caps again when it ran back through it. So we're going to celebrate 50,000 maybe twice is what's going to happen here. We'll see.
So Michael, I know you also look at macro issues. There's a couple really interesting things going on politically. One is this infrastructure bill, right, where, crypto advocates have been trying to change this crypto tax provision that is supposedly terrible for the U.S. crypto industry. That does not seem to be working. It seems to be moving through Congress, and yet Bitcoin is still doing pretty well. And then tomorrow we have Fed Chair Jerome Powell expected to give some remarks. Do either of these factors, do you see them as having an impact on the crypto market?
Yeah, I mean, I don't know that we, as always, can say that there are immediate fundamental factors that drive the price on a day-to-day basis, but these are obviously both very important issues for crypto and ultimately would weigh in, I think, to where prices end up going for sure.
Great. Okay, thank you.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
So for over 35 years, Vast Bank has been a locally owned financial institution based in Tulsa, Oklahoma. And today it is embracing crypto. It claims to be the first nationally chartered bank that will allow customers to buy, sell, and hold cryptocurrencies directly from their bank accounts. Vast Bank CEO Brad Scrivner joins us now. Welcome, Brad.
Hey, Emily and Michael. Great to be on the show. Thanks for having me on.
Wonderful to have you. Okay, well, let's start with the biggest question here. As I'm sure you know, Bitcoin was kind of invented to make banks irrelevant, basically. And it was sort of, to kill the intermediary, so to speak. So the question is why do we need a bank at all to get involved with crypto? I mean, why can't people just sort of directly hold crypto and buy and sell it through exchanges? Why do we need a bank in the middle?
Well, that's a great question. And, we are all about customer preference, right? So if you think about this world of finance, we support DeFi. We're talking to folks that are in the DeFi world, but the fact is that there is a need for intermediary in many cases. Okay, I mean, what do you do with elder abuse? What do you do with the fraudsters that are out there trying to take advantage of people? And that historically has been a place where intermediaries have stood in the gap. In addition, especially right now, at some point in time, perhaps DeFi will be able to get rid of intermediaries altogether. But at least right now in the United States, and we have a well-established framework of law. It creates certainty for institutions. It creates certainty for businesses. It creates certainty for those that want to take advantage of the financial services industry and to participate in it. So I think that the solution is for us to work together. And this is an opportunity as a bank We are highly regulated. We are a national bank, which means that we have the ability to custody assets across all 50 states and territories. And so we are more than willing to work with those in the DeFi world to help navigate, to help work with regulators and make sure that we have a safe and sound environment for everybody to participate.
Hey, Brad, thanks for joining us. I'm going to guess that that's downtown Oklahoma City there behind you.
Actually,
am I correct?
Yeah, no, it's Tulsa. Yeah.
Okay. So that you are, so the point I'm trying to get to is you're an Oklahoma bank. I imagine that your client base is largely, from Oklahoma, and therefore, how does this strategy fit in with that? Is this something that allows you to essentially reach out to a wider audience? Obviously, the crypto marketplace is essentially global. What is the underlying sort of market strategy behind this with respect to you being a regional bank?
Yeah, so if you think about this, we actually have customers in all 50 states and in Puerto Rico. And so, with a digital banking footprint, like, for example, we partnered with a fintech called Investor, right, in the second quarter. And they're sitting on top of our platform, and they have the ability to do equity and crypto and bank, all settling into the bank account side by side. All right. So here in the third quarter, we are launching the ability directly with the bank. And again, we get back to what customer preferences are, right? Some people are going to prefer to control things themselves, to take on all of those security components and be in the DeFi world. Some people are going to want to work with a fintech that is going to have a value proposition that speaks to them. In the case of Investor, that's where social and education and finance meets. Okay, some people are going to want to work directly with the national bank and have us custody those assets. So for us, it's all about listening to the customer and trying to help them achieve and come alongside of what it is that they're trying to do. So that's the larger strategy for us. And again, this is a very large world. Let's 10, 20 years from now, let's fight over things and, like the financial institutions do today. Today, we need to be working together. We need to put the customer interests first, and we need to figure out how to solve these problems as an industry to make things transparent, private, to reduce costs, and to make it more convenient for our customers.
So just to follow up on that point, can you just talk a little bit about how this came about? Like, was this something that customers were really clamoring for, or was it more kind of on the banking side, like this was a way for the bank to make more revenue?
Yeah, well, coming out of the downturn, right? I mean, let's kind of start there, and we're not going to do a big history lesson, but obviously, the financial services industry has a very large defensive moat. Coming out of the downturn, there was a chink in that armor, and you had people that were doubted, or lacked some trust that was going on. And simultaneously with that, you had more power being put in the hands of customers, and, with Amazon or Netflix or whatever the case may be, with those experiences that are being delivered. And the technology enabled those things, right? So you had all of these different factors that were coming together. We are a family-owned bank, the Biolchini family in Tulsa, Oklahoma. And so, they didn't want to sell the bank. So as CEO, I'm a steward, right? We try and accomplish what our shareholders want us to be doing. And so we recognized that there was a tremendous threat that was going on in the industry because of the factors that I just mentioned. And we made decisions starting about 5 years ago. Sorry, my lights, the lights are going off here in my office, didn't move fast enough. But anyway, so we started decisions about 5 years ago to put in place an underlying technology platform with SAP, which allowed us to be able to look at customer preferences and be able to stay relevant as they changed. So that's the underlying platform, those decisions that really started in 2016. We started implementing the SAP platform in 2018, and we knew that blockchain and cryptocurrency as a use case. Now, we were looking at trade finance and things like that. I thought that might be the first use case. But when Mr. Brooks came out with the announcement about national banks and being able to custody assets, I believe it was last July, we were able to pivot along with one of our fintech partners, and which led to us doing the first transaction in January, the fintech partnership in the second quarter, and then now with our direct offering here in the third quarter. And I'm going to try and wave my arms a little bit here to bring the lights back on. Sorry about that.
Those dance moves going.
Yeah, exactly.
Look, you'd be well aware that we've got some crypto native startups that actually themselves have now sought out bank charters, predominantly through state charters. You've got the Wyoming banks of Kraken and Avanti. Now, Avanti in particular have done so for the purposes of giving them what looks like the security of issuing a stable coin to really sort of stand up that as a trusted entity. How are you different from that? I mean, and are you at all interested in going down the stablecoin route as something to offer?
Well, we've launched with 8 cryptocurrencies, okay? And going back to the SAP platform, it's a multi-currency platform, right? So we can take a look at multiple coins, and we will go through legal review, we will look at customer demand, and we will, we're really interested in not getting into the security world that's going on with that. But yes, of course, we'll be looking at stable coins. Now, I want to reiterate, we're a national bank. We are highly regulated. We are going to continue to do things in a safe and sound manner. We're going to do the appropriate due diligence before we do those things. But assuming that stable coins check all of those boxes, we are more than willing to participate with those as well.
Thank you so much, Brad. I think we have to wrap it there. That was Brad Scrivner of Vast Bank.
Thank you so much.
Coming up, crypto markets analysis. Time now for the daily forecast and update on what's happening in the Asia crypto markets. Here's Angie Lau of Forecast News.
Welcome to the Daily Forecast, August 26th, 2021. I'm Angie Lau, Editor-in-Chief of Forecast News. Coming up, South Korea reveals its crypto exchange death note, DeFi investment booms, and a white knight rides in for a hacked Japanese crypto exchange and its users. Let's get you up to speed from Asia to the world. First up, in South Korea, the top financial regulator in the land has issued a so-called death note of crypto exchanges. On that death note, a list of 24 out of 63 exchanges in Korea most likely to close up shop after stricter rules kick in September 24th. It's changing the face of the crypto exchange industry in one sudden swoop. And the impact on both the exchanges and crypto investors in South Korea will be dramatic. Forecast News' Danny Park has more.
The clock is ticking for Korean crypto exchanges. Expiration date, September 24th. That's when any crypto exchange who wants to remain in business in South Korea must be licensed under Financial Services Commission's new regulations. But the FSC's death note list shows 24 exchanges haven't even started on meeting the first condition of the FSC's requirements, obtaining the Information Security Management System certification. Since the ISMS certification takes 3 to 6 months to process, they've simply run out of time to even be considered for a license. And with the names of those exchanges clearly appearing on that list, the FSC is possibly triggering a crypto run on the exchanges as well. That's if users decide to withdraw their crypto or cash in case of a sudden closure. For Forecast News, I'm Danny Park.
In the rest of the world, the markets are buzzing, and we're seeing things heating up in DeFi as well, with the total value locked into DeFi hitting an all-time high. But this time, DeFi's defiance of market gravity looks different. Could it be a sign of things to come? Forecast News' Lucas Caccioli has the details.
According to data from DeFi Llama, that value locked in hit 157 billion US dollars earlier this week, and many of the top 10 DeFi tokens gained more than 20% in the last 30 days, coming within reach of all-time highs. Others are soaring, with Project Avalanche's AVAX token gaining more than 400%. In May 2021, when DeFi last saw the value locked in climbing to new record heights, Bitcoin and Ethereum were also hitting all-time highs. This time, DeFi is defying that coupling, rising to new heights even as the price of Bitcoin and Ethereum remain a little cool. Tanya Zhu, APAC Business Development at Celsius Network, told Forecast News that the exploration of new chains has seen the emergence of a flurry of Layer 2 and Layer 3 solutions that are attracting a chunk of the market that's thirsty for yields. She also said that while crypto markets have typically been retail-focused, DeFi yield farming is seeing interest from bigger players. That more liquid space means more projects and more protocols can be developed, which means we could see more growth to come. For Forecast News, I'm Lucas Caccioli.
There's a boom in tokenized green bonds as well, and Bank of International Settlements, the central bank for central banks, if you will, has joined forces with Hong Kong's monetary authority to go green. It's called Project Genesis, and the goal is to build a digital infrastructure prototype that gives peace of mind to investors, that enable transparency on the use of proceeds of green investments. And it's tapping a Hong Kong blockchain startup to help out. All infra will verify data tracked in real time. Tests of the prototype start now, with a report expected by the end of this year. And finally today, victims of a recent hack of the Japanese crypto exchange Liquid are probably breathing a sigh of relief right now. They're going to be made whole thanks to a Hong Kong-based knight in shining armor. Another crypto exchange, FTX, has offered a loan of $120 million US dollars, with FTX CEO and founder Sam Bankman-Fried tweeting that he admires Liquid and wanted to make sure its customers were protected. Almost $100 million US dollars worth of assets were stolen in the attack last week, but Liquid has confirmed the loan means that users will not suffer any loss as a result. Cybersecurity lessons learned the hard way over the past few weeks. Another reminder that you might want to consider that cold wallet of yours again. And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Editor-in-Chief Angie Lau. Until the next time.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
Let's check in on Bitcoin again. So the CoinDesk Bitcoin Price Index XBX is currently trading at just over a little over $47,000. That's down less than 2% over the past 24 hours. The CoinDesk Ether Price Index ETX is currently trading at around $3,100. That's also down a little bit under 2% over the past 24 hours. And finally, the CoinDesk DeFi Index DFX is trading at around $638. That's down over 2% over the past 24 hours. So let's dive now into crypto markets with CoinDesk markets reporter Damanick Dantes. Welcome back, Damanick.
Hi, guys. Thanks for having me.
Great to have you back.
Hey, Dominic.
So Damanick, let's just get right into the charts. You have a chart about Bitcoin that sort of you found interesting. Can you explain to us what this chart signifies and why it's important?
Yeah, so this is a daily Bitcoin chart. Each bar just shows a daily price move. You can see the support and resistance levels just basically showing where buyers and sellers are active. We have, really sold off over the past few months, but stabilized around that 30K support level. And you can see there that consolidation period that lasted for a few months resolved itself to the upside. So there was a nice breakout of the 42K resistance level that is now support. And then the breakout above the 200-day moving average is now providing some support around 46K to 45K. And there's an upper resistance zone. So if you take a measured move from that breakout, the first target would be 50K, where buyers have struggled over the past week. And then the next upside target will be 55K. But below that, you see the relative strength index, or the RSI, which is a measure of momentum, has been weakening, and that's been diverging with the price rise. So that just basically shows that there is some light profit taking that is happening. And I expect support to hold between the 42K to 45K support zone.
Hey, Damanick, so, that 200-day moving average, can you just dig into that a little bit more? Like if it breaks below that, does that trigger, is that likely to trigger some sort of bigger sell-off? What is that? What would be the significance of breaking support?
Yeah, break below the 200-day moving average would lend support around 100-day or the 50-day moving average. And that's around 45, 43K. So that'll be the next test. But typically when you see breakouts, they tend to be constructive. And we look at those short-term support and resistance levels. A failure to hold that 200-day just makes it seem like it's a lower high from April, May, and then now in August. And that would be a cause of concern. I think the 60K level over the long term provided some strong resistance, and that's been keeping some buyers on the sidelines. So we really need to see some of that upside momentum materialize, and that would, definitely be a hold of the 42 to 45K support zone.
Damanick, you also have another chart that's on a slightly different topic. So Cardano has been absolutely exploding recently. Can you tell us a little bit about that? What's driving that? Do you think it will last? Any information you could share would be very valuable.
Yeah, so it's been an explosive move. I mean, we've seen a lot of these altcoins make all-time highs while Bitcoin and others have been kind of struggling. This move has been unprecedented, right? It's a large, almost 90% up move over the past month. You can see it held at 200-day support around late July, which is very constructive, and then that breakout above 1.4. And then we had that challenge to the May 2021 high around 2.3, and then a strong breakout from there. So consistently, the buyers have been holding those support levels. Right now, we look extremely overbought, and we are seeing some of the divergence kick in as well. Around the latest all-time high, around $3. I expect the retest to be around 2.4. But right now, we're seeing some short signs of stabilization, which could lend itself to some consolidation. And that just means buyers are picking up at support just to recapture some additional profits.
Damanick, look, keying a little bit off that Cardano chart, it still seems for the most part that altcoins tend to move in tandem with Bitcoin. Bitcoin's down and everything else looks pretty much in the red. But we see these sort of breakout coins every now and then. And one this week has been Avalanche, which it seems, obviously some big developments on their protocol side have been a part of this, but also this big incentive system through this liquidity process that's really bringing a lot of DeFi actors onto Avalanche and driving up its thing. Is that something, does that point to the possibility to break out using these kinds of techniques? Or is that just a sort of a short-term thing that ultimately gets overwhelmed over time when all the enthusiasm dies down?
Yeah, it's been very enthusiastic, right? It's kind of a local market in its own where a lot of the risk-taking has occurred. Typically, when you see these breakout moves like Bitcoin holding 30K and breaking above 42K, that's a signal that there is strong risk-on sentiment in the market. And typically what you see during that phase is altcoins outperform. So basically, investors and traders are shifting to where the profit potential is the highest, and that's been within the DeFi universe or the altcoin universe. And I think a lot of that has been supportive. There is an analyst that said that it's a DeFi casino yield farm, and I think that's true. A lot of the folks, the traders, are looking for the next hot opportunity, and there's a lot of speculative excess going on. So you'll see the relative performance between these altcoins play out. And I think when one market breaks out, another market might be the next one to support some opportunities. So Avalanche does look a little bit overbought. You're seeing some short-term support signals here. That breakout above 40 was very constructive. So just like Cardano, I expect a retest of that breakout to support a little bit more buying interest.
Thank you so much, Damanick. That was CoinDesk Markets reporter Damanick Dantes. Coming
Thanks,
up,
guys.
the latest news from the regulators.
CoinDesk Indexes, the market standard for crypto assets since 2014. Our trusted data powers billions in publicly traded funds. CoinDesk Indexes are the standard used by institutions, and they're the key for investors looking to understand and access crypto markets.
CoinDesk Bitcoin Price Index, XBX, has been instrumental to Grayscale, enabling investors around the world to access Bitcoin through a regulated, familiar product.
CoinDesk Indexes enabled the early adopters to build crypto investment vehicles, and they're already trusted by a new generation of global investors.
Welcome back. Time to check in with Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk's State of Crypto newsletter. Welcome, Nick.
Hey, good morning.
Good morning, Nick. So I am sure you are tired of us asking you about the infrastructure bill, but we're just going to double down on it. So what's happening with the infrastructure bill? And are there any latest updates this week now that it is going through Congress?
Yeah, no, we're kind of still waiting to see if anything changes, but so far the status quo does seem to be that Congress will not move to amend it at all before they vote on it by the end of September. And if so, then that means the broadest version of the provision that we've seen, which the industry has pushed back on, will be signed into law by the end of the year.
So let's move away from the infrastructure bill for once here, Nick, and look at something else on our horizon. Tomorrow, of course, Jerome Powell, chair of the Federal Reserve, I think, is giving his speech as part of the Jackson Hole, once again, virtual symposium. Always a very big event in the central banking world. How important is that for basically the broader outlook for crypto? And I suppose I'd also just think of whether we're expecting to see anything come from other central bankers with regards to, crypto and digital currencies during that event.
Yeah, Jackson Hole, I think, we've seen in the past some pretty high level musings around crypto. A couple of years ago, I think it was 2019, we saw the Bank of England suggest a stablecoin backed by numerous different countries and assets. So we could see that. I think if we do, it'll be pretty high level, kind of hypothetical rather than anything concrete. But, as far as Jerome Powell is concerned, I think everyone's kind of just looking to him to see if he has any comments or thoughts on, what they've been describing as transitory inflation for the next, over the next coming months, and whether or not the Fed's going to start, either tapering or, changing how it's approaching, these issues, as far as the inflation arguments is concerned within the crypto community.
Nick, anything else on your radar over the next couple of weeks now that some of these big dramas seem to be dying down a little bit?
Yeah, I think there's two big themes I'm keeping an eye out for. So one is the ETF race. It kind of, for a while there, it looked like we wouldn't get any ETFs at all in the crypto world in 2021. But we're seeing, with Jerry Gensler's recent remarks, we're starting to see more and more applications around Bitcoin futures ETFs. And there's kind of this increased expectation that one might actually be approved this year. And of course, it remains to be seen, whether or not the market is in a place where the SEC is comfortable with it. They've had concerns about surveillance sharing agreements and market manipulation in the past. So maybe futures are something they'll see as more tightly regulated, more closely surveilled, and therefore worthy of an ETF. I think, there's still no guarantee it's happening, but there's been, I think, a ramping up of expectations that it's more possible now than we thought 3 months ago. And then the other side is, we've talked a lot about various investigations by the U.S. government. I think we're getting close to a point where we're going to start seeing whether or not these investigations are bearing fruit and whether or not they're going to start bringing charges against various companies into space.
Thank you so much, Nick. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day, who recently was named Reporter of the Year by the Association of Cryptocurrency Journalists and Researchers. So congratulations on that, Nick.
Well done, Nick.
Thank you.
Congrats.
And also don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. That's it for First Mover. Thanks to my co-host today, filling in for Lawrence, CoinDesk Chief Content Officer Michael Casey. I'm Emily Parker. Coming up at noon is The Hash, and then we will have All About Bitcoin at 3 p.m. Thank you for watching First Mover. You're watching CoinDesk TV.